Hello, and welcome to today's video on Investing 101, Personal Finance Tips for Beginners. If you're new to investing, it can be a little overwhelming, but with the right mindset and knowledge, you can start building your wealth and securing your financial future. So, let's dive in. Before we get into the nitty-gritty of investing, it's important to understand why investing is crucial for building long-term wealth. Over time, the stock market has consistently gone up, despite fluctuations and temporary drops. This means that by investing your money in the market, you can potentially earn a higher rate of return than if you simply kept your money in a savings account or CD. When it comes to investing, there are a few key terms you should know. The first is diversification. This means spreading your investments across a variety of assets, such as stocks, bonds, and mutual funds. This helps to reduce your risk in case one asset class underperforms. Another important term is asset allocation. This refers to the mix of assets in your portfolio. Depending on your goals and risk tolerance, you may want to allocate more of your investments to stocks or bonds. Next, let's talk about compounding. This is the idea that your money can grow exponentially over time as you earn interest on your initial investment, as well as on the interest you've already earned. The earlier you start investing, the more time your money has to compound. Now, let's talk about some different investment options. The first is stocks, which are ownership shares in a company. When you buy a stock, you become a shareholder and can potentially earn money if the company's stock price goes up. There are two types of stocks: common stocks and preferred stocks. Common stocks represent ownership in a company and give you voting rights in company matters. Preferred stocks, on the other hand, don't give you voting rights but give you priority over common stockholders when it comes to dividends and asset distribution in case the company goes bankrupt. Another investment option is mutual funds, which are collections of stocks, bonds, and other assets that are managed by a professional investment company. By investing in a mutual fund, you can benefit from diversification without having to research and choose individual stocks or bonds. Bonds, on the other hand, are loans that you make to a company or government entity. In exchange for the loan, you receive interest payments over a set period of time, as well as the return of your initial investment when the bond matures. There are different types of bonds, such as corporate bonds, municipal bonds, and treasury bonds. Corporate bonds are issued by companies, municipal bonds are issued by local governments, and treasury bonds are issued by the federal government. Generally, treasury bonds are considered the safest because they're backed by the full faith and credit of the U.S. government. Another investment option is a real estate investment trust, REIT, which allows you to invest in real estate without actually owning property. REITs are companies that own and manage income-generating real estate properties, such as shopping malls, apartment buildings, and hotels. By investing in a REIT, you can potentially earn regular dividends and benefit from the appreciation of the underlying real estate assets. Now, let's talk about some investing strategies. The first is dollar cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of market conditions. This can help you avoid the temptation to buy high and sell low, and can also help you take advantage of market downturns. Another strategy is value investing, which involves looking for undervalued stocks or assets that have the potential for growth. This can involve analyzing financial statements, researching industry trends, and looking for companies with a competitive advantage. Of course, investing can be complex, and there's no one-size-fits-all approach. That's why it can be helpful to consult with a financial advisor who can help you determine your goals, risk tolerance, and investment strategy. Before you start investing, it's important to also consider your overall financial situation. Make sure you have an emergency fund in place to cover unexpected expenses and pay off high-interest debt like credit card balances. These steps can help you avoid financial stress and set a solid foundation for your investments. Finally, remember that investing is a long-term game. Don't get discouraged by short-term market fluctuations or make impulsive investment decisions based on emotions. Stay disciplined, keep learning, and be patient. Your future self will thank you. And that's it for today's video on Investing 101, Personal Finance Tips for Beginners. I hope you found this helpful and feel more confident about taking your first steps into the world of investing. Thanks for watching, and I'll see you in the next one.